Hello guys, I hope you're all doing well. Welcome back to a new YouTube video. In this one, we're going to discuss a trade recap on AUDUSD. It's a very textbook setup in terms of what to look for. Very repeatable, it was just very much a classical setup of how we trade here at ZCFX. Now, again, I just want to apologize for the inactivity here on YouTube. I've been a little bit busy. I'm currently in the process of moving house yet again, but I'm also working on some projects as well behind the scenes, some of which I can't mention, but the one I can mention is that the ZCFX course is now pretty much all finished. There are a couple of videos that I'll continue to add over the long run. Just there'll be videos uploaded on a monthly basis anyways, but the ZCFX course, the 2023 edition, is now out and can be found on our website. So if you are interested in that, make sure you go ahead and check that out. Obviously, along with that, you'll get access to our Discord community, and also you get access to myself, messaging support wise, which we can go over any questions, confusions, and etc. To clear up that you may have from the course. Right now, as you can see here on a weekly time frame, price has obviously moved bullish. It came back down and tapped into this demand area. Right, as we are tapped into this demand area, pretty much the way I see it here on the weekly is that we have point A, and then obviously we're going to look to where can price go, so point B, and obviously it is this high just based off this weekly high here. Right, so point A to point B, obviously we took the trade around sort of this area on a lower time frame, but that is our sort of high time frame bias. I'm expecting price to obviously come up and break above this high, right? So we can go ahead and do that. Obviously you can go ahead and mark up the demand zone as well. Price mitigated that. Okay, now moving to the H4, like I said, there wasn't much chart work involved in the daily, except price has just been bullish anyways. Now here on H4, in hindsight, you can already see very clearly that price is moving bullish. So the obvious thing here to do is obviously to look at buys. Now, obviously, once we have that weekly intention in mind from point A to point B, it's now just trying to figure out where we can get involved in that move on the lower time frame. Okay, so here on H4, like I said, price moving bullish. We chalked here, broke structure, continuously breaking out into new highs and into new ranges. And then obviously from there, what we're going to be focusing on is a trade around here and obviously targeting into the weekly high, just continuation, right? So like I said, just high time frame intention, low time frame sort of entry in accordance with the high time frame intention. So you always want to keep that in mind. Now we're just going to focus on this bit of price action here. I don't need to go ahead and mark up every chalk on BOS, but I'm just going to focus on these two breaker structures here as well. Okay, now as you can see here, we had broken above here, so obviously we entered into a new range. We broke above here again and obviously broke above there as well eventually, right? But we're not going to focus on this break because we took the trade around here. So as you can see here, again, going based on supply demand chains is one of the things we look at and which validates a POY. Obviously sometimes it won't always be a supply demand chain, but it's one of the things that's quite optional to validate a supply demand zone. And obviously pretty much just what that is previous mitigation. So it's where is price previously mitigating, right? Then obviously we're expecting price to gravitate towards that similar area again, because obviously as we know, the price moves up and down because obviously the BFIs are buying, selling, so they're mitigating out their orders continuously. Very briefly, that was a brief introduction to what it is. But they're mitigating obviously the other orders, etc. So that's the reason for price gravitating towards the same sort of rough areas, right? So as you can see there, price came back down, mitigated this demand zone, put in a new high, obviously entered into a new bullish range, came back down, filled this imbalance. Obviously balances are quite important as well, as well, you'll see that in a minute, especially on the M1. But as you can see here, price came back down, mitigated that H4 demand, right? Now, as we had mitigated that H4 demand, the next thing to do is obviously look to drop to the M15 and then wait for a bullish chalk, because obviously if there is no bullish chalk, price could just be bullish, bearish, continue to be bearish here on the M15. But obviously once we get that bullish chalk, that's when we can look to partake in the move, right? So obviously we have our bullish bias in mind. We're expecting price to continue to be bullish. Now price has obviously mitigated that H4 demand chain. As you can see here, we have this low, and then obviously we go back and we have this high here. We do chalk above here, and we do also break above here. So at this point we've sort of confirmed the bullish trend here on the lower time frame. And again, just keep the higher time frame in mind. We know that we're moving bullish, right? So that's the objective. We're looking to target into the overall weekly highs. And then from there, obviously, price broke above this here, so we had a chalk. So obviously chalk is unconfirmed trend. They're still tradable. I take chalk entries all the time, but we didn't get a pullback into any of the demand zones. We didn't even pull back into the discounted region. We then instead moved bullish and created into a new bullish range. We can also look at this as well in terms of previous mitigation. Like you can look at this here. This is a supply zone. Price gave a nice reaction to it before violating it. Then obviously from there came back down, mitigated this sort of area, and then broke into a new high. So we can look at that as a sort of previous mitigation point. So, you know, maybe if we were to look at this zone, I know a lot of you probably would have this zone marked out down here or something like that as well. So you got two POIs to play with, then you'd usually just drop to the M1 and see which one price reacts to, and that's fine, okay? But obviously, again, price came back down, mitigated this zone. So the obvious thing to do is from there is obviously drop to the 1 minute time frame, right? So it's very repeatable. H4 just broke bullish, pulled back into the H4 demand zone. M15 dropped to M15, that's just broke bullish. Let's pull back to the M15 newly formed demand zone. We dropped to the M1, and again, let's just see how price played out in the M1. As you can see here on the M1, it's very important to listen to the little details and actually zoom in and get involved, you know, in the present moment. So as you can see here, price had tapped into this M15 zone very nicely. But obviously, again, we go back here. We have a chalk above here on the M1. And I mean, you could argue you could have got an imbalance entry there or something like that. And then obviously the price again breaks a structure here. So we broke bullish again, confirming that sort of M1 trend. And then from there, price had mitigated this POI in which we took the trade from. And the reason for that trade is, and why we chose that zone and not this wick or anything, it's just based on this imbalance, right? There's no imbalance below this zone, so there's no reason for price to go lower, okay? And obviously, in terms of relevancy, in terms of like, you know, wicks, hidden supply demand, whatever, you know, you may think, okay, price may come back down to this zone, but I'd primarily use wicks refined as on a high time frame, especially, right? This here, price broke structure, entered into new range. There's no imbalance for price to come down further. So you'd go ahead, set your limit order off there, or you can wait for a bullish candle, a bit of extra confirmation, whatever, it's up to you. Again, the stop loss placement is very subjective. You can either have it below this low, below the 15-minute low, or you can have it below this zone. It depends on obviously your risk tolerance and sort of the type of trader that you are. But for me, the stops are there, it was just enough. And obviously, again, targeting into the overall high time frame highs, so the weekly highs, and there you go, we have it as a nice little trade. You can go ahead and manage structure in terms of breaks, you know, move stops, etc., trailing stop, and maybe take up partials there and let price run higher. That's all subjective, but in terms of the entry process, in terms of what we looked at, you know, it's simple mitigation, chalk, BOS, whatever, right? Doesn't matter if you take a chalk entry or a BOS entry, they're both still valid, obviously if applied correctly. But that's a very textbook setup in terms of what we looked at. Very, very textbook. Obviously, again, the risk to reward doesn't really matter. It's quite irrelevant because obviously where you would place your stops is completely subjective and up to you. But what I would recommend doing is just to go ahead onto the chart, AUDUSD, and just simply check out this trade. It's a beautiful trade, very textbook, and like I said, in terms of what we looked at, and obviously the way we trade, you know, we look at this pretty much, you know, every day, right, whenever it plays out. So yeah, that's pretty much it really for this trade recap. Any questions or issues and things like that, you already know what to do, guys. Drop me a message, and yeah, just take care, guys, and thank you for watching.